Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at Bitcoin here first, and then some of the stocks that just reported, and yeah, threw in a couple of small caps at the end. And so first up, we've got the Winklevoss brothers. Bitcoin ETF was rejected by the SEC for the second time, and so that is putting some pressure on Bitcoin. As you can see here, Bitcoin actually formed a bearish Harami reversal pattern on the 25th, the red candle inside the green candle. That pattern was confirmed yesterday, and then now you're looking at two closes in a row, or not close. There was one close yesterday below EMA4, and now today's candle is forming below EMA4 at 7939. That's the big line to get back above that pink line. All the candles have been forming above that level since this reversal started after this pullback here. And so if it breaks, what you can see is a possible drop down here to the gold line. That's the 100-day simple moving average at 7610. So yeah, failed to get back above this, failed basically, to make it simple, failed to hold 7900 support, and you could see a drop down to 7600. 7600 is going to be really important. If that level breaks, that's also lined up with EMA 13 here, the orange line, that you could see a drop all the way down here to the 50-day simple moving average at 6760. Now also right here above that 100-day simple moving average is the previous resistance level from back here in June, and so you want to see that turn into support. That 7700 is going to be a big level. Now that it busted through the 77 resistance, you want to see it hold on a pullback. If it dropped below, that would signal possible consolidation coming. Okay, so let's take a look at Facebook here. Facebook had that huge drop here. This is the biggest market value loss in the history of the stock market. I believe it was a $121 billion loss in one day on this 19% drop. I know some call options were up, or put options were up like 10,000% today. So that was an insane gain for people that were thinking this was dropping, and so that's a crazy huge drop. So you can see where it opened here, down here on the 300-day simple moving average. So that's the big level to hold, 175. That's the line in the sand right now. If that 175 level breaks, you could see it drop down here much lower. You've got the bottom of this gap. There's a gap here between low of day on this candle and high of day on this candle. So it dropped down here to about 161. You know, that would fill the gap. So what you would have here is the top of the gap level will be really important to hold, that 170, because if it drops below, you could see it work its way down. Okay, so to the upside, if this 175 level holds, just above is the 200 and 100-day simple moving averages, and so that 180, 150 resistance zone is going to be the next big level to break above. If you look here at the Facebook weekly chart, this is a chart from back here in March when it had the big drop below that 50-week moving average, the green line. Back here in the end of 2016 when it dropped below the 50-week moving average, it got back above quickly. Same thing back here in 2015 when it dropped below the 50-week moving average, it got back above quickly. Right here it tested that level and bounced off. And so now the thing that's happening this week is that 50-week moving average is breaking once again. It doesn't happen very often. Now tomorrow it could bounce and close back above that level. The big level is 179.82. If there's a weekly close below that 50-week moving average, that will be a red flag. It's also breaking that middle Bollinger Band at 183.44. If those two levels turned into resistance, it could start a downtrend. If you look back here in that March drop, it dropped all the way down to that 100-week simple moving average support zone, which is down here at 158.79. And if you think the news was bad enough here on the earnings call, I think there's a chance that level could be tested. If 180 resistance fails to break and that turns into resistance, I think there's a good chance it could come down there and test that zone. I mean, the news, the forward-looking guidance with that huge drop in earnings per share is going to be, I think that threw everybody, a serious curveball. Okay, so let's look at Amazon here. Amazon closed down 3% today. puts, okay, it was only a 3% move to the downside for the equity. Puts were up. There were some contracts that were up 2,000, 3,000% today. And so, yeah, that's the power of the options, of trading options. Now, you know, keep in mind, options are a wasting asset, and you know, you could lose your entire investment. You know, if you get far enough away from the strike price, it could go to zero on you. And so, yeah, there's always winners and losers. But today, the puts were the winners. Now, after hours, there was a big move. Earnings went well. You know, they had a beat and a miss, and I believe they beat on earnings per share, but they missed on revenue. And yeah, it's at 1865.50 in after hours trading, and so that does put it up at an all-time high. Now the all-time high level did get hit today at 1895. That was hit after hours trading. You can see here intraday the previous close yesterday was 1863.60. That was the all-time highest close ever for Amazon. What was yesterday's close, and so you want to see it stay above that level. If it can stay above 1860, that should be a signal. Okay, yeah, it's pushing higher. It wants to keep cruising. Now, if you see it drop below 1860, then it could possibly consolidate. Definitely, if it gets below 1840, if it gets back in this previous channel, then you could see. You know, you want to see it break out of this range, trade above 1840 and 1860, and make a new high. And so right now, you know, this is going on a potential blue sky breakout, has a very nice uptrend. We'll just have to see how the market responds tomorrow. Right now, it's looking like a gap up open, and if it's like Google, it could have a gap up open and keep pushing higher. Let's look here at Amazon on the monthly chart. Look at this chart. If you loaded down here in 2001, down in the $6 range, I mean, this would be the best investment of your life. I mean, look at this. It's at 1800. Bottom line is Amazon has a very strong uptrend. I don't know if it can keep this trajectory forever, but EMA4 support has been holding at 1681.50. As long as that level's holding, there's no reason to sell if you're an investor or a long-term, you know, if this is more of a long-term investment. You know, we mainly focus on trading, but if you're a long-term holder, if this EMA4 is holding at 1681, just keep riding. Let's look here at Intel. Intel, you know, they missed today. They had a big drop in after hours. It's down to 49.21. It was lining up here. AMD, you know, did well yesterday, and so yeah, people were wondering if yeah, you know, everybody's trying to figure out which semis are going to do well. It's been a mixed bag, and Intel, you know, got punished after hours. It's down here testing the key level. It's the 200-day simple moving average at 48.36. You want to see that level hold tomorrow if you're a bull. If it drops below that 200-day simple moving average, that would be a major red flag. Notice that that's lined up with this support from April and from here in June, and so it's also at 49.21. I mean, that's putting it down here at that lower Bollinger Band level. You want to see it hold this support zone if you're a bull, and then work its way back up to the middle Bollinger Band. If it failed to hold 49, and then definitely if it dropped below this 200-day simple moving average, that would be a major red flag signaling more downside risk. Okay, take a look at Chipotle. This is a big winner, a huge move after hours, trading at 475.95. Check out how it had this, you know, had a descending triangle type pattern. It had or you could even call it a falling wedge if I drew another descending resistance line right here. But the bottom line is, or descending support line. Yeah, if you just look right here, you can see it just, you know, bottom line is it busted through this descending resistance line, this red resistance line, and after hours trading, it's all the way up here at 475.95. The big level right now is going to be, you know, stay above this high close resistance level. You can see this channel, you know, has been a tough level to break, this 470 level. If it can stay above 470, it should be the signal that it wants to keep pushing higher. If it dropped back below 470, it could get back in this previous channel, and so so right now, you know, they pulled it down heading into earnings, and the bulls are rewarded big time. It needs to stay above 450 as well. 450 is the 50-day simple moving average. That level's been holding. Got us, you know, it had just closed below that level yesterday or today, but you know, right now it's back above that level. What you want to look at is the weekly chart when the stock's breaking out, and then you can see here it's up here at 475.95. That's putting it up here where the 300 and 200-day simple moving averages are at. You have the 300 or week moving averages. You have the 300 week moving average at 474, and so you want to see it stay above that level and then bust above the 200 week moving average. That's the red line at 482. So a weekly close above both levels would be really bullish. You also have this 2017 high close from back here in May of 2017 at 490. So those are really the three big levels to close above for the week. You know, if you had a weekly close above 490 for Chipotle, that would be super bullish. If it fails to close above these levels, you know, it could signal a temporary top. This has been the tough level to break. You can see it came up here and hit the 300-week moving average and pulled back. And so breaking above and turning into support would be the signal that it wants to head higher. And so if you look at the, you know, let's say it does break out above the resistance, look at the monthly chart. Okay, so each candle on this chart, it represents 1 month of trading. You can see on the monthly chart, 480 is the big level to break. That's the May high close here. You get above 480, just above it is the green line. That's the 50-month moving average at 492. And so you want to break above 492 and then 508. That's the bounce level right here at 508. Get above those levels and it could really get moving. I mean, you could see the high was back here at 740. So you know, this could get moving. It got above the middle Bollinger Band and the 100-month moving average back here in April, and so it has a nice uptrend going now on the monthly chart. If it can get above that 50-month moving average at 492, that would be really bullish. Okay, keep in mind the monthly chart candle sets on the last trading day of the month. Okay, at the closing, after the closing bell. Okay, so here's ticker symbol EXPE, another big winner. Okay, so this is at 137.30 after hours. Okay, so this was a big percentage gain. It's way up here at after hours trading. That's putting it above all these resistance levels. And so you know, this was the high close for 2018, the highest close at 132. And so right now at 137.30, if it dipped, you want to see it stay above that 132 level. You want to see it turn that high, the high close into support. Just below that is the 300-day simple moving average at 128.63. That's the blue line. Notice how all these candles were hitting that level. You want to see that level turn into support. If it could stay above that 128 and 132 level, it could push higher. There's a gap back here in October between low of day on this candle and high of day on this candle, and so if it worked its way up to 144, that would be the top of the gap. And so yeah, so we'll see if EXPE can keep following through. And yeah, take a look at LRCX, another big winner after hours. So yeah, this is a semi that did well. You know, you have Intel over here, same sector, all right, big drop, and then you have LRCX here, Lam Research, with the big pop. And so it's coming down to, you have to be, you know, select the right company, you know, and so you know, you have to, you know, not all semis are going to be working right now, and yeah, you know, I think yeah. So the bottom line is you got to follow the charts. Right now we've got to break out above 185.65 in after hours trading, and so that's putting it above the green and the blue lines. That's the 350-day simple moving averages, and so 183.45, that's the green line, the 50-day simple moving average. If it could stay above that level, that would be really bullish. You want to see it stay above the 50-day simple moving average. This is right around where it's at right now in after hours trading, and so if it keeps pushing higher, the key level to break is going to be this 100-day simple moving average at 192.68, and then this gap. There's a gap between low of day on this candle and high of day on this candle, and so the bottom of the gap is lined up with that 100-day simple moving average. That's going to be really tough to break. If it breaks above that 192 and into 193, that would be really bullish. It could possibly fill the gap and run up to 197. Okay, so take a look at AMGN. Okay, another earnings winner. Okay, it's not up huge, but it's at 196.04. 194 right now. It closed at 194. That's putting it right here above the high close from July, and so you want to see it stay above that level, and that would be the signal that it wants to break out higher. And then you have the high from back here in 2018, and so that's at just above 198. And so if it can stay above 196, look for 198 as the next target. That'll be the next big level to break. Okay, let's take a look at AVGO here. This is a chart from a few days ago. Made this chart here on the 19th. And then, and then it followed through, made this nice run up to the middle Bollinger Band, and so it stalled out at the middle Bollinger Band at 227, and so that's going to be the big level to break. If it can close above 227, that should be the signal it wants to head higher. Today, a red candle form, but not a bearish reversal pattern, and so so far this looks like more of a pause in this upward movement as opposed to a correction. Now, if it were to drop below 219, okay, that's EMA 8, that's the bottom of EMAs 4, 8, and 13, that would signal downside risk. That would be a sell signal. Okay, if it's holding 219, it's still in play, but it has to break above 227. So going forward, above 227 signals upside potential, possible run up to these moving averages to 240, and then you have the gap, the top of the gap here, possible gap fill, and then a drop below 219 would be a sell signal. Okay, let's look at AVGO on the 15-minute chart. Here on the 24th, I posted this chart showing that it was at this flex point. So you had the 300 simple moving average and the 50 simple moving average had both come together here in a symmetrical triangle kind of pattern. It was the candles were at a flex point where either resistance was going to break or support was going to break right at the open on the 25th, and so that break above resistance on the 25th signaled an upside potential, and it had that nice run higher, and so that was super cool. And then it came up here and it hit this resistance. Right, so I should have made those red, but it hit this resistance, kind of double topped here and pulled back. And so going forward, AVGO's got to get back above this 50 simple moving average at 224. So 224 is the big level to break. If you can get it back above 224, that'll signal it wants to keep pushing higher. And then you have this 228 resistance zone is the big level to break. If 224 remains resistance, you could see a drop down to the 100 simple moving average at 220. That's going to be the big level to hold below. Okay, let's take a look at FDX. All right, so yeah, this has been on a big move. Okay, it got above the middle Bollinger Band back here on the 18th, and it started this new uptrend, and so it's worked its way up to this red line, and then now I'm seeing here it filled this gap. There's a gap between low of day on this candle and high of day on this candle, and you can see the gap filled today. And so many times a gap fill can be a climax event. All right, where it could be a temporary top. It's also hitting the red line there. That is the 200-day simple moving average at 241.85. If it can break those two levels, just above is the 50 and 100-day simple moving average here in the 244 resistance zone. 244 is going to be a tough level to break. If it can break above 244 and turn that into support, that would be super, a very bullish sign, and then that would be a signal that this uptrend's intact and wants to keep heading higher. If it stalls out here in this 242 to 244 resistance zone, it could take a breather. A drop below EMA 4 at 239 would signal consolidation. As long as it holds that middle Bollinger Band and that 300-day simple moving average down here between 231 and 233, this uptrend's intact. It just has to break through resistance. Now, keep in mind today a bearish reversal pattern did form, bearish doji star. Notice the doji that formed today. The doji candlestick, that's where the open is at, or very near the same price as the close. You could see, the previous close was at 240.24, and the close today was 241.24, and so that formed a close enough doji since it's a $200 stock. But what it signals is that a possible pause in the uptrend. Okay, so it didn't form above the upper Bollinger Band. Okay, it's right at it is at the upper Bollinger Band. It didn't form above it. It did have the gap up open. Yeah, I mean, it could take a breather here. This could just be a pause candle. We'll see. Okay, let's look at AWX here. We'll finish up with two small caps. This has been on a huge run. I haven't been able to find any news on this, so I mean, it has that real pump and dump type of vibe, but they pushed it hard. I mean, look at the previous runs. on this stock where it had the pop and then the big run and then they dumped it, and then the same thing here. It's like it had this repetitive pattern, 3 times in a row, and then this time they changed the pattern. I was thinking it was possibly going to sell off, but they kept pushing it higher. You never know when they're going to do that. It's getting very frothy here. You've got the multiple gap up opens. You have RSI at 92, Fasto at 97. I mean, there's no juice in the tank. I mean, look at the parabolic spike right there. Look how vertical these candles are. You can't sustain this trajectory. Now they can keep pushing. You never know. But at some point you're going to have a sharp drop. It's going to pull back. You have the EMA4 at 427. That's the next support level below. That's lined up with the close from yesterday. There is big volume behind the move. If you look here on the weekly chart, it is you can see the weekly chart's frothy too. It's at 87 on the weekly chart up here, and then 97 on Fasto. 157% gain this week. So congrats everybody that traded this. It hit this, hit 2 levels in a row where I thought it could stall out. First, 2 days ago it hit here at this 375 level, and it was just above it. And then the analysis was if it could stay above that 360, 370 level, then that should signal that it could keep pushing higher, and it did do that. But it ran up here to this next level, the 440 level, and it looked like, okay, this is where it's likely to stall out. That was yesterday, but it busted through that today. Today it started off with the black candle, and it was looking like, okay, yeah, this is stalling out, but they kept pushing it higher, and then now it's hitting the next key level, which is up here 2014 and 2013. This is a huge resistance level. I'm calling it the 580 resistance zone. If it can bust through 580, then it could keep pushing higher. If it stalls out at 580, this could be where it takes a breather. That's where it topped out back here in 2013 and 2014. Notice how it filled the jar quickly on this thing. I mean, look at the volume, huge volume behind the move. So very impressive. Still don't know why it's running, but yeah, it's made one heck of a great run. Okay, and then finally, keep an eye on the stock. I don't know, it caught my eye. CHFS. It had the volume spike yesterday, and it got above the middle Bollinger Band, currently at 166 temporarily, and then it pulled back. And then so yeah, it has a really ugly chart. It could keep going lower. When you have a penny stock that has some volume spikes at the bottom, many times that signals that it's possibly going to try to make a run. This could have already been the run. We'll see. If it gets above 166, it could get moving higher. If it drops below 160, that would be a sell signal. It has to stay above EMA 4 and 8 to keep this bounce going. Okay, thanks for viewing this video. If you'd like to learn more about charts of technical analysis, please come check out the chat. Thank you. And you've got Bitcoin, dropping below EMA 4 here. It could be time for we'll see. But if you look here at the volume for Bitcoin, I mean, notice it had the big spike here at the end. It looks like there was some profit taking followed by some red candles. And so what you need to see now is another volume spike. Okay, thank you for viewing the video.